In this video, we are going to do the statement of cash flows with special focus on cash flow of operating activities and cash flow of financing activities. To do that, we are going to have to prepare a ordinary share capital note in order to get some information that we will use in our cash flow statement. And also again on this video, we are going to touch on some financial indicators. We are in question 2 of the November 2023 paper 1, and it reads as follows. The information relates to Sharebase Ltd for the financial year ended 28 February 2023. Required 2.1 wants us to prepare the ordinary share capital note. Why? Because there is some information in there that we are going to use in our cash flow statement that we are just going to transfer from there to there. So it's easier if we start by preparing this note, and that's why it was required. And then in 2.2, that's when we are now completing the cash flow statement, only focusing on operating activities and financing activities, meaning that we have skipped the investing activities for this particular financial statement. And then in 2.3, that's when we are going to be doing our financial indicators for net asset value per share and for dividend rate, and lastly for percentage return on average shareholders equity. To be able to complete 2.1, which is our ordinary share capital note, we will have to look at information A and information B. So information A is share capital and dividends. It shows us that on 1 March 2022, 1.2 million shares were in issue. In 30 June 2022, an additional 300 shares were issued. And then on 1 December 2022, 90,000 shares were repurchased from a retired shareholder. He was paid 80 cents above the average share price and would no longer qualify for dividends. And then in information 2, the only one that we are interested in there is our ordinary share capital amount from 2022, which was 7,200,000, and the one from 2023, which is 9,306,000. So filling in our ordinary share capital note, we have our additional shares at 300,000 shares. To know the price that we actually sold those shares for, we were never given that information, so we would have to work it out. So that means that our amount for additional shares is going to have to be a balancing figure. So then we are going to leave that for now and then go on to enter our repurchase shares of 90,000 shares. In our information, they tell us they were repurchased for 80 cents above the average price, but what we need to record them at is the average price. So we need to find out that average price. So to find that average price, we can use our year-end balances. So we need the number of shares at the end of the year and the amount itself. The number of shares at the end of the year is 1.2 at the beginning of the year plus the 300 additional shares minus the 90,000 shares that we repurchased, and we have 1,410,000 shares at the end of the year. The amount itself was given to us in information B on our ordinary share capital, which was 9,306,000. Now we can use these two amounts to figure out our average share price, which we are going to use to find our repurchased shares. And then once we fill in our repurchased shares, we can go and find our balancing figure for additional shares. So to work out that average price, we are going to use a formula, which is ordinary share capital. This is at the end of the year, so the one that you found in your information B. And we are going to also divide it by the number of shares. That number of shares also is going to be at the end of the year. And we have already established that in our information B, our ordinary share capital has been given to us as 9,306,000 all over. The number of shares that we have in issue at the end of the year have also been calculated in our note, and is 1,410,000, and all of that is going to give me a total of 6 rands and 60 cents as my average price. So that's what I'm going to use to calculate my shares repurchased. So now that we know that my Average price is 660. I'm going to take my 90,000 shares, multiply it by 660, 594,000 in brackets. So then I'm going to use all of this amount in order to find my balancing figure. To find my balancing figure, I'm going to use the bottom up method in order to figure out what is here. So that means I'm going to start with this amount at the end, and because I'm starting with the amount at the end, it means that I'm going to do the opposite as I'm going up. So whatever was subtracted, I'm going to add it. Whatever was positive, I'm going to subtract it. So 9,306,000 plus 594, and then minus 7.2 million, and it all gives me 2.7 million as my answer for additional shares. 2,700,000. Moving on to my cash flow statement, they have entered for us interest paid, and they have already even put the amount there, so we need to just fill out the next line item, my next one being dividend paid. Now with dividend paid, what are you putting in? For dividend paid, you are putting in interim dividend and final dividend of last year, because we are looking for dividend paid. Remember, this is a statement of cash flow. We are tracking the cash, so we want things that where cash actually went out or where cash actually came in. So why am I talking about final dividend of last year? This is how companies work. When they declare a dividend, they will not pay out that dividend at the time that they declare it. So what happens mostly with final dividends, because it's at the end of the year, interim is better because it's during the year. So we could declare it in the middle of the year, and then towards the end of the year we would have paid it. But with final dividends, because the year was already at its end, the problem then becomes that whatever we issued in 2023, that means that because the year 2023 was already at an end as far as our financial year is concerned, so that means that by the time we pay it, that would be in the next financial year. So we never ever get to pay the final dividend declared this year during this year. So whatever we declared this year, we will pay next year, meaning whatever they declared last year, they will pay this year. So my concern here, when I'm trying to record dividend paid, I'm going to record last year's final and this year's interim. Are we together? Last year's final and this year's interim. That's going to give me the actual amount of dividend that I have actually paid and the cash actually went out. So according to our information E, we have a final dividend per share on 28 February 2022. This is last year. So they declared 24 cents. That was last year. That means we are going to pay this one this year. So that means that it needs to be part of my information or part of my calculation when I calculate my dividend paid. So that's last year's final. And then this year's interim dividend per share was paid on 31 August 2022. That means they declared it before that date, and that was the date that they paid it. So they could have declared it in June, they could have declared it in May, and decided that they are going to pay it by the end of August 2022. It could have even been declared on the 1st of August, and then by that month end they will be able to pay it. So that's the one that we are going to record at 30 cents. And then they also gave you information about final dividend per share on 28 February 2023. That is this year's one, and it's even a question mark. Now for dividend paid, I don't have to worry about that one. I don't have to worry about that one because I will only ever get to pay it next year. Usually when they show it like that, it's only just declared or it's only been recommended. So I will only ever take out the cash next year. So for as far as this financial year is concerned, I don't have to worry about that final dividend that is a question mark. My concern is the 24 cents one last year because I'm paying it this year, and the 30 cents one because it's the interim and they already told you that it is paid. So we have to calculate those two, last year's final and this year's interim. Let's do some calculations. So last year's final, we know that it's at 24 cents, but we need to know how many shares were issued by the end of last year. So when last year came to an end, how many shares were in issue. This is why we had to start by preparing that ordinary share capital note, because that ordinary share capital note helps us with such things, so we get to see proper. So last year's final shares that were in issue are going to be this year's opening balance. So last year's closing balance is this year's opening balance. So when you look at your ordinary share note, your ordinary share capital note, it shows you that at the beginning of the year, the number of shares that we had in issue were 1,200,000. So that's the number of issue that we had at the end of last year, hence we began this year with them. So this is what you multiply by that 24 cents. 24 cents, when you put it in your calculator, is 0.24. I know that in the information when they give it to you, they just write 24,0, and that's just there just to confuse you. When you punch it in the calculator, it's actually 0.24. So you will punch this in your calculator and it will show you that the last year's dividend that we are paying this year is 288,000. Adding to this amount, we are going to also include this year's interim. This year's interim, we need to know on the date when we were paying this interim, how many shares were in issue. How many shares were in issue? Again, that's where that note that we prepared in 2.1 comes into play, because it's very specific and it shows us our clear dates even on information A. So according to information A, when we issued our additional shares, it was 30 June 2022. Why am I concerned with that date? I want to know that when we were issuing or when we were paying interim dividends, were the additional shares already issued out? Do I need to worry about those shareholders or not? So according to information E, the interim was paid on 31 August 2022. So you will see that's after we had already issued additional shares. It's before we repurchased the ones that we repurchased in December. So I don't have to worry about the 90,000 that was repurchased, because on 31 August 2022, I have not reached the date of repurchase yet. So that means the shares that were in issue by the time I was paying my interim, it's the ones that I began my year with, which is my 1.2 million, plus the 300 additional shares that I also issued. So that means that the total shares that I had to pay the interim on were 1,500,000 shares, and I paid for them an interim of 30 cents. So again, that's 0.30. Put it in your calculator and it gives you 450,000. And this 450,000, therefore we are saying our total dividend paid will be the 288,000 that I paid for last year, and the interim of 450. I don't have again to worry about the issued year, the ones that were declared for this year, because that one is next year's problem. So I'm only worried about these two. So 288,000 and the 450 that I have issued for interim. So my total for my dividend paid is 738,000. So transferring into our answer book, we did last year's final plus this year's interim, and in bracket, because we have paid, this is what we have paid, so this is a cash outflow, is the 738,000 that we have just calculated. The next line item in our operating activities is income tax paid. For income tax, we have information D, and it shows us net profit that amounted to 912,500, and then they tell us in the second bullet that income tax is calculated at 27% of net profit. So usually when we have net profit before tax, we will just take that amount and multiply it with the 27%. But in this case, what we have is net profit after tax, meaning this amount of 912,500, they have already minused or subtracted tax out of it. So that means that this represents only 73%, not the full 100%. So for us to get the tax amount itself, we are going to multiply by 27 over 73. Where do I get this 73? I just simply said 100, which is a full percentage. It's 100%, and I subtracted the 27, so I'm left with 73. So the tax for the year, when you punch this in your calculator, it will tell you that the amount of tax for the year that I get is 337,500. Now this is the amount that I'm supposed to pay, but remember, we are doing the statement of cash flows. For cash flows, we only want what I actually paid. We want to trace the cash. So this is by general sense, by law, what I am supposed to pay. But did I pay it? You find out that in most cases it's not exactly the amount of payment that I made to SARS. I could have made my provisional taxes that are less than this, and I could have made provisional taxes that are more than this. Those amounts are the amounts that I need to account for when I'm saying the amount that I actually paid, because this says income tax paid, so it needs to be the total amount that I paid to SARS, meaning the cash that actually left me to SARS. So this is what I'm supposed to pay. So what I paid has got to be determined from this amount. So for me to determine what I have actually paid, I'm going to start with this amount. This amount, I'm going to say this is minus 337,500. Why minus? Minus shows that this is an outflow. This is an amount that I'm supposed to take to SARS. Obviously, I'm going to add back whatever I didn't take to. So that means I'm going to look in information B for my SARS income tax to see that did I pay them or did I not pay them. So for example, when I look at my SARS income tax in information B, I'm seeing that there's 27,800 for the year 2023. That 27,800 is on the credit side. It shows that whatever I paid to SARS, I failed to pay the 27,800. On the credit, it means that SARS is my creditor, meaning I'm owing them that amount. So that means that out of this amount, I paid them everything except for 27,800. So because I didn't pay it, it didn't go to SARS, I'm going to add it back to show that I paid this amount except for the 27,800. So it needs to be added back, because we are saying when we are doing cash flow that this amount did not leave me. So this wasn't a cash outflow. It's not an outflow because it didn't leave me. So if I'm saying this is supposed to be my outflow, I'm saying this is the amount that is leaving me except for the 27,800. And then you will see that in 2022 I had 42,500. 42,500 is on the debit side. It means that in 2022 I discovered that I paid SARS too much. So that means when I did this part for SARS, instead of owing them last year, I had found out that I have paid them too much, so they need to give me a refund. So because we filed our taxes at the end of the financial year, it's the same situation that we deal with when we deal with final dividend. We file at the end of the financial year. So when I find out that SARS actually owes me a refund, they're not going to give me the refund the same day that I filed my taxes, which was at the end of the year. No, they are going to take a couple of months before they pay me, and by the end of those couple of months we would already be in the next financial year. So if I discovered on 28 February 2022 that SARS also actually owes me a refund of 42,500, on that day the financial year for that year would be ending. So even if I discovered it that day, I filed it that day, and I sent everything that day to SARS, they will not be able to process my payment on that day. They could process it at earliest the following day, but that following day would be the 1st of March 2022, which is the beginning of the new financial year. I hope you get what I'm saying. So no matter what I do, there is no way that SARS can pay me my refund the same year that I skied, because I file at the end of the financial year. So that means that that one belongs to the previous financial year, so they are going to pay it to me in this current financial year. So that amount of 42,000 is going to come back to me from SARS. So it's an inflow. So I'm going to add 42,500, and the total that I would have paid to SARS actually will now be 267,200. This is what I'm paying to SARS. That amount in my answer book, I'm going to put it in the brackets to show that it's a payment and therefore an outflow, and it's going out, and that would be the end of my cash flow of operating activities. Now we move on to cash flow of financing activities. Our first line item will be proceeds from issued shares. So our proceeds from issued shares, this is the money that we made from selling shares during the year. So the shares that we sold during this year, only the ones that we sold during this year, and that would be the additional shares. Why? Because the shares that we opened with, which were the 1.2 million shares, would be from the previous financial year. So that means that the ones that we have sold during this year, the only ones that we have sold during this year, were the 300 shares that were sold on the 30th of June 2022. So this takes you back again to that ordinary share capital note. So you will see that this 300 shares, these are the same ones that we sold from this year, and their proceeds were this amount. You take this amount as it is. You even get an operational mark. If you knew to transfer it, even if it was wrong, you would have gotten this operational mark. So it was 2.7 million. This is the profits from shares issued. And then next, we are now going to record the ones that we repurchased. So the funds that we used to repurchase these shares, repurchased shares. So these funds that we used to repurchase these shares, we are going to now record them here. Now for this one, it's not going to be as simple as taking this amount and putting it here. Why? Because here, remember, we were specific and made sure that we recorded at an average price. But in truth, when we remember, these shares were not sold at 6 rand 60, they were sold at 80 rands above average price. So that means they were sold at 6 rand 60 plus 80 cents. So we need to record here, we need to record it at a full amount. So this line item on our cash flow of financing activities is what we call funds used to repurchase shares, when you write it out in full. And the shares that were repurchased, there were 90,000 of them, and they were purchased at that average price of 6 rand 60 plus 80 cents. That one that they said was above average price. So 90,000 multiplied by, you put this in your calculator, and it should give you 7 rands and 40 cents. So the funds that we use to purchase shares are going to be 666,000, and that is what we are going to put in our financing activities. Because it was a repurchase, it's going to be in bracket to show that it's a cash outflow. We were spending to buy back the shares. Then the last line item would be our change on loan. Change on loan, we have information C that says loan statement from Mega Bank, and it says the annual loan statement for 2023 reflects the following. Bullet point number 1 is the balance on 28 February 2023, and that's 1,678,600. We have interest capitalized for the financial year, which is 117,600. If you remember well, in our operating activities, they had already entered this amount for us. That capitalized means that when we make repayments, this interest was included in the repayments that we were making, meaning it was not separate. We are the ones who have separated for our books purposes. So that means that when you start to see the amount of monthly payments, you should remember that this interest is included in those amounts. And because you have accounted for it here, you have to remember so that you can subtract it wherever you are putting your repayments. Because why? You have already counted it here. So if you count it again with your repayments, you're going to do what we call double accounting, and your books are not going to balance. So the next bullet there says monthly payments including interest of 22,750. So you see, it's saying including interest, meaning that's what they mean when they say the interest is capitalized. So this is when we want to record the change on loan, we want to record the amount of loan that we have paid, meaning the cash that has left us. So the cash that has left us is those monthly payments. So these monthly repayments become our actual outflows. So that's when 2,750, they are monthly, so I have to multiply them by 12 to show that I'm annualizing, and I'm going to get a total of 273,000 as the repayment that I have actually made to the bank, meaning that this is my cash outflow. However, remember that this amount was including interest, so that means that this amount includes interest. And since we have already recorded interest in our operating activities, I need to make sure that I take it out of here so that I avoid double accounting. So I'm going to just take out the interest. The interest was already annual, so just take out the 117,000. So the amount that I'm actually repaying without interest is 155,400, and this is what I'm recording in my changes on loan. The amount goes in bracket to show that it's a payment and therefore a cash outflow, and that would be the end of your cash flow statements as far as this question is concerned. Our last requires is the calculation of financial indicators. So we are going to first start with the net asset value per share. The net asset value per share, if you don't know your formula, is shareholders' equity over a number of shares issued. So we are looking for shareholders' equity of this year. You are going to find this in your information B. You're going to look at ordinary share equities, the first line item, and that first line item is 10,200,000, and you are going to divide it by the number of shares that were in issue at the end of this financial year. This takes you back again to 2.1, and you're going to look at the number of shares at the end of the year, which was 1,410,000. The formula requires you to multiply this by 100 in order to turn your final answer into cents. Punch this in your calculator. 723.4 cents is what you get as your net asset value per share. Then the next one is our dividend payout. Our dividend payout wants you to, the formula says interim dividend plus final dividend all over net profit after tax. When we were calculating dividend paid, we found out that our interim for the year was 450,000, and we want to add it with our final dividend. Our final dividend means the same thing as shareholders for dividends. So because our final dividend, they gave us a question mark, but when you go to information B, you will find that we have what we call shareholders for dividend. Shareholders for dividend means the same thing as final dividend, and the one for 2023 is 282,000, so they are plussed together all over our net profit after tax. Our net profit after tax is in information D at 912,500, and you are multiplying everything by 100 this time because we want to turn it into a percentage, and that gives you 80.2%. There are other methods of doing this, but this is the one that I prefer given the information that we have been given. And then our last indicator is percentage return on average shareholders equity. Its formula is net profit after tax all over average shareholders equity. So net profit after tax, we already know from information D that is 912,500 all over average. When they say average, it means you're going to take 2 years, add them together and divide them by 2. So in bracket, you will take the shareholders equity of 2023 and 2022 and add them together. So the shareholders equities from information B, 2023 shareholders equity is 10,200,000 and the 2022 one is 7,985,500 in bracket, and everything in bracket will be divided by 2, and that will all be multiplied by 100 as well, and that is going to give you a final answer of 10.0%.